Hello everyone, this is Mike Osterman from Legacy Capital Planners with our February 2013 stock market and economic update. After a tough December, markets were on a bull run for most of the first part of this year, with the Dow achieving its strongest January performance since 1994 and hitting 14,000 for the first time since the crash in 2007. For the month, the S&P gained about 5%, the Dow gained about 5.8%, followed by the Nasdaq gaining 4%. After a lot of debate, lawmakers were finally able to come to an agreement to avert the fiscal cliff on January 2nd. While we're happy that the fiscal cliff is no longer hanging over our heads, we're actually disappointed that lawmakers couldn't come to terms over spending. Instead, by temporarily suspending the federal debt ceiling, they postponed a critical element of this debate. Feel free to contact our office if you'd like a copy of our report concerning this topic. January kicked off earnings seasons with the release of the fourth quarter earnings from most major companies. So far, the trend is good enough. Not great, but not awful either. Total earnings for the S&P 500 companies that have already reported are up nearly 2% over the third quarter, meaning that companies are doing better than last year. Even better, executives are upbeat about future earnings and business conditions, meaning that we may see improved performance in the first quarter of this year. The last week of January saw a flood of economic data. A couple of highlights for you. The U.S. GDP contracted in the fourth quarter by 0.1%. While a lot of people were pretty worried, economists believe the numbers are artificially low because of some unusual factors, including lower defense spending. Increases in consumer spending, construction, and business investment show us that the economy is still on a moderate growth path. January's final consumer sentiment numbers actually beat expectations as consumers regained confidence lost during December's fiscal cliff debate. But people are actually still worried about new tax increases. The latest employment numbers show us that unemployment rate ticked up to 7.9%. However, economists are actually revising their 2012 unemployment numbers as more jobs were created than they originally thought. Although we're pleased with January's market rally, ups and downs are a normal part of healthy markets, so we don't worry and we're not surprised if we see a retreat in the near future. We're also hoping that lawmakers start discussing their ideas for reining in government spending pretty soon too. As always, we'll keep you updated. We actually do have some important upcoming events to make you aware of. We do have a public program at O'Donnell's in the Kentlands on March 13th and 14th starting at 6:30. We also want you to stay tuned for our end of tax season shredded event. It's going to be happening a couple of days after the end of tax season, and our second quarter wine tasting probably happening sometime closer to Memorial Day in May. As always, if you do have specific questions for us, feel free to contact our office at 240-395-1060. Other than that, this is Mike Osterman signing off for the month from Legacy Capital Planners, and we hope you have a great day.